apologies for the delay. Um, we appreciate your time this morning. I'm Lauren Peretti, and I'm joined this morning by my colleagues Howard Birchman, Shannon Quinn Sheeran, and Sarah Zeiderveen. And we are part of the team at Housing Innovations that provide support to the Connecticut Balance of State Continuum of Care. So today's session is part two of a two-part series on fiscal requirements in the Continuum of Care programs. And in case you missed our first session, it was recorded and is posted to our website. So before we get started this morning, just a couple quick housekeeping things. We are scheduled to end today at 11:30, and even though we started a little bit late, we will be sure to end on time. We'll answer as many questions as we can during the webinar, and if we don't get to your question, I know I can stay on for a few minutes at the end of the webinar to answer any questions that we're not able to get to. And you can also reach out to our team at any time. We're always available to answer your COC related questions, and our contact information is at the end of the deck. So we'd love to be able to see you all, and it's, I think, nice for you guys to be able to see each other. So if you haven't already and it works for you today, please turn your camera on. If you want to change your name, so that we know many of you, but not all of you. So if you want to change your name in Zoom, there's a little graphic here on this slide that shows you how to do that. And that way we can be sure to address you by the name that you want to be addressed by. Shannon is going to get our slides into the chat momentarily if she has not already. And, you know, please don't wait. These go much better if it can be more conversational. So it's not just Howard and I talking the whole time. So please, if you have questions or comments, don't wait for us to prompt at any time. Feel free to unmute and ask your question, or raise your hand. Shannon will also be monitoring the chat for us, so you can feel free to put questions in chat as well. And this session is also going to be recorded, and Shannon is super speedy, so it'll be up on the website probably later today, certainly by early next week. So final quick housekeeping thing. If you have experienced any audio difficulty at any time during the presentation today, feel free to join by phone, and the information for how to do that is here on this slide, and Shannon will also get this information into the chat. So it's nice for us to know who's in the room. We've got, how many people do we have? I don't know, 50 or 60 people in the room. So it's not going to be possible for us. It'll take too much time for everyone to be able to introduce themselves, but we would love to see who's here. So if you can take a moment to just pop into the chat where you work, your agency, and what your job is at your agency, where you're located in the state, and something you're looking forward to. We like to start these off on with something positive. So I know for me, I'm very much looking forward to the spring. Got a little bit of a taste of it early this week, and I'm looking forward to getting out into my garden this spring. So take a minute and share with your colleagues. See someone else looking forward to summer. Sylvia, me too. Someone's looking forward to their nephew's birthday. That's lovely. Warmer weather. Ooh, paddleboarding. That's exciting. Being outside. Lots of votes for spring. Looking forward to the weekend. Well, you don't have long to wait. So there you have it. So, all right, keep going. Sharing all that goodness with your colleagues. And I am going to move us on to our agenda. So this is our agenda for today. We're going to talk about, last time we talked about what costs are eligible in the COC program. And so this time we're going to talk about what costs are not eligible under your COC grant. We're going to talk about how most of you are likely billing staff time to your COC grant. So we're going to talk about what the requirements are for backup documentation for that staff time that's getting billed to the grants. We're going to spend probably the bulk of today talking about project administration costs, the project administration budget line item, and indirect costs, and what the differences are between those two things. That's something that I think can be confusing for a lot of folks. Howard's also going to talk to us about the single audit requirement for the COC program, about grant expenditures and eLOCCS, about the rules around compensation and gifts, internal controls, and then we'll wrap it up talking about the sanctions that are possible that HUD can implement if you are not following the requirements that we'll talk about today and we talked about last time. So the first thing we're going to talk about is costs that are not eligible. So basically in your COC programs, the only thing that you can charge participants, right, people who are getting help from your programs, is the only thing you're allowed to charge them is rent or occupancy fees, right? So if you have a project like a PSH project, for example, you can charge them rent, but that rent has to be calculated in accordance with the HUD rules, and we will be talking about those rules coming up in our webinar on housing requirements. And then for other kinds of programs, rapid rehousing programs, for example, you have to can only charge rent in accordance with the COC requirements. Also, we'll cover that in the upcoming housing requirements training. And then if you've got a TH program, a transitional housing program, you may be charging some kind of occupancy fee, although I think most of our TH programs are not charging occupancy fees. And that's it. That's all you can charge participants. So there's a list here on this slide of things that you may not charge participants, but it's not exhaustive, right? Because basically you cannot charge participants anything other than rent or occupancy charges. Some things that we commonly see, actually program fees we don't commonly see, but it's not allowed. So you cannot charge participants, for example, a case management fee or a fee to participate in a group, right? If you own a building and you are renting to folks in a COC program, you cannot charge, for example, air conditioning fees. You cannot charge for lost key fees. You can't charge late fees, right? If someone pays their rent late, you can't charge a fee for that. You can't charge legal fees. If you have to evict someone, you can't bill those legal fees to the participant. You also, so COC security costs, security deposits are eligible costs. We talked about that last time. You cannot charge COC participants for their own security deposit, right? You can't say to participants, you can move, but if you want to move, you have to pay for your own security deposit. That's not allowable. You also cannot charge participants for damages that they, to the unit that they're living in. Nor can you require them to put money into some sort of mandatory savings account. Certainly voluntary savings, great, but you can't mandate that they put money into a savings account as a condition for receiving assistance through the COC program. So now many of these things that I talked about are things that are commonly you're going to see landlords, private market landlords charge, and that is allowable, right? This doesn't preclude private market landlords for charging these things. It only precludes you as either the recipient of the HUD funds or the subrecipient of the HUD funds from charging these things. There's a question.
Yeah, you see that.
Can you go in depth on security deposits? We're not going to go in depth on security deposits, what's allowable today. We'll cover that in the housing requirements training. But just to say for today that, again, you can't, you never can say to a COC participant that they are responsible for paying their own security deposit. Okay? And if you've got more questions, stay on after and we'll answer whatever your questions are about what is allowable for security deposits. So So these are costs that are never going to be allowable on any kind of federal award, COC or otherwise. These are, federal rules around things that you can never charge to the federal government. And you know what? Most of these things are pretty common sense, and these are not things that we typically see you doing when we come out and monitor your programs. I'm not going to go through all of them. But there are a few I wanted to make special note of. So bad debts, right? So a bad debt is basically an amount that someone owes to you that you can't collect. So probably the most common thing for your programs would be if it's a congregate project and a building that you own and you're collecting the rent and somebody doesn't pay their rent, right? You can't bill HUD for that rent that you were supposed to collect from the tenant, right? Entertainment costs and alcoholic beverages, right? You can never charge alcohol to a HUD grant, and you can't use your COC funds for things that are really entertainment, right? So you can't do things like take your clients out to the movies and charge that to your HUD grant. Similarly, you can't do things like if you have an annual staff appreciation day and you take your staff out on a really fun outing, right? Great thing to do, but it's not billable to the federal government. You can't charge that on your HUD grant. Fines, I think this comes up most commonly probably when staff are out in the field driving a vehicle for work and they get a parking ticket maybe, right? You can't bill that fine for that parking ticket to your HUD grant. Damages in some sort of legal proceeding, right? So if a court, let's say you've got a tenant living in your building and, for whatever reason, they sue you and HUD awards that client damages, you cannot charge those damages to your HUD grant. You also can never charge your agencies like advertising or fundraising expenses to your HUD grant, right? So don't bill your development staff, like don't charge part of your development staff to your HUD grant. If you've got any costs associated with an appeal to donors or an annual fundraising gala, none of that is billable to your HUD grant. Interest expenses, so this is something, unfortunately, that your agencies may be currently contemplating. It's March, right? And even though HUD announced the COC awards for 2024, they have not yet started the contracting process. So some of your grant agreements may already be expired or be expiring soon. And sometimes agencies don't have enough cash flow to carry those grants and have to take out a loan. So if that is something that your agency is contemplating, know that any loan interest that you incur is not going to be charged, cannot be charged to to the federal government, which seems kind of unfair given that you are currently holding the bag on those grants until such time as HUD initiates those contracts. We talked last time at the very beginning of the session more in detail about the current situation with what's going on with the awards. So if you've got questions about that, feel free to stay on and we'll answer those questions, or you can also go back and watch that session one, the intro to that. We talked a little bit about that. So, and
Lauren,
then, yep.
I just wanted to add one thing
Yeah.
on this. If it's unallowable as a direct cost, it's also unallowable as an indirect cost. And I've seen this sometimes when people talk about what they're charging to indirect costs, they'll charge like some development, fundraising expenses like that. If it's unallowable, you can't use federal funds to pay for it, whether it's directly billed or you can't include it as part of your indirect cost pool either. You can't use federal dollars for that purpose.
Thank you, Howard. And then the final thing I was going to say is lobbying. I think probably most of your agencies don't do lobbying, but if you do any lobbying, you cannot charge any costs associated with that lobbying onto your HUD grants. So next item here. So HUD has these rules around COC budget line items and which line items cannot be combined. I'll just cover the ones that are typically relevant in our grants. So you can't use both the rental assistance budget line item and the leasing budget line item on the same unit, right? Those budget line items are intended to cover, virtually identical costs. And so HUD would consider that double dipping, and double dipping is always a no-no, right? You also can't have both a COC rental assistance budget line item and another kind of federal rental assistance, right? So you can't have a unit where you're getting both COC rental assistance and you're also getting Section 8 or HUD VASH, for example. That would be considered double dipping. Now, there is an exception to this sort of in joint transitional rapid rehousing projects, which we do have a few of in the COC. In those, normally you can't combine rental assistance and leasing in a single grant. There's an exception to that for joint TH rapid rehousing. So those projects can use the leasing budget line item in the transitional component and the tenant-based rental assistance in the rapid rehousing component, but you can't combine both leasing and rental assistance for the same unit. You've got to use leasing just in transitional and rental assistance just in rapid. And then similarly, HUD also says that you can't use the rental assistance budget line item and the operating budget line item on the same unit. So the things that are covered in the operating budget line item, right? So like unit maintenance and, repair and, security in the building, right? Those are things that are generally considered to be the landlord responsibilities. And so you can't pay for those things with an operating budget line item on units that you've got, that you're getting a rental assistance subsidy for. HUD would also consider that to be double dipping. And then similarly, there's also the ability in a joint transitional rapid rehousing project, you can get operating and leasing on the TH component, but you can only get rental assistance on the rapid rehousing component. So even though you might have operating and rental assistance both in that budget, you have to be sure that you're only expending the operating dollars on the transitional units, and you can only expend the costs in the rapid rehousing component should be covered by the rental assistance budget line item, and you may not charge operating costs on those units. The rest of the things on this slide I'm actually not going to cover because they pertain to capital costs, and we really haven't used capital costs in CT BOSS in a very long time. So I'm going to move on to talk about what backup documentation you need when you've got staff time that you're billing to a grant. So the good news is that if you've got staff who are working on just one project, right, and they're only working on a single budget line item in that project, then all you're going to need is timesheets, and those timesheets should be signed off on by a supervisor, right? So for example, let's say you've got a case manager, and that case manager only works on one project, right? And 100% of their time is spent providing case management services, which is going to be a supportive services budget line item, then all you're going to need is a timesheet for that person. The bad news is, unfortunately, that's often not the case in these projects, and you've got staff either that are working on more than one project, or they're working on more than one COC budget line item. So for example, if you've got a staff person that is, a case manager, and that case manager is working on two different projects, whether they're COC projects or a COC project and another project at your agency, timesheets alone are not going to suffice. If you've got, let's say, a housing coordinator who is both helping people to locate units, right, which is a supportive services cost, and that housing coordinator is also doing HQS inspections, which is a rental assistance cost, as we covered in session 1, right? Again, you're going to need more than just a timesheet because that person's working on two different COC budget line items. So when that's the case, you're going to have some additional backup beyond just the timesheet that documents, if HUD were to come out and monitor you, how much time that person spent on each COC project and on each budget line item within that project. So it's, that is burdensome. Unfortunately, that's the HUD rule. If you can avoid that burden by making sure that staff are assigned just to one project and just to one budget line item. But again, given the budgets in these projects, that is not always going to be feasible. And so when it's not feasible, here's one example of how you might be able to document that time. Throughout the presentation today, anything that is green and underlined is a live link in the PDF of the slides that Shannon put in the chat. You can click on this and it will take you to this tool. And basically you can see here, you've got the person's name, their title, what date they performed the eligible activity, what budget line item that activity is eligible on, so supportive services, rental assistance, admin, right? And then briefly what they did and how many hours they spent on it. And you've got them signing and their supervisor signing. Now, you may already have some other system at your agency that can provide this information, case notes, or maybe some kind of log that you use for your maintenance staff. Those systems would also potentially be allowable, but you want to make sure that they've got a decent amount of detail similar to what's shown here, in order to make sure that you've got the backup documentation that HUD is going to be looking for. So, all right, I think we are going to do a poll here to go over some of what we've just talked about. I think Shannon's going to launch the poll for us.
Do you see it?
Yes, we do. Thank you, Shannon. So I'll give you a minute to respond. I'll read the questions out loud in case anybody's only on the phone and not on Zoom. So can COC recipients or subrecipients charge participants for a lost key? Must staff who provide case management services and do housing quality inspections track time by COC budget line item? And must staff who work on two different COC grants or a COC grant and a non-COC grant track time on a personnel activity log?
Maybe while we're waiting for people to answer, there's a question in the chat.
Thanks, Shannon.
Is participating in CAN activities and meetings admin or supportive services?
So participating in CAN meetings, I'm trying to think of where that would fit under supportive services. I think you probably could fit that under supportive services, right, Howard? Yeah. I think it fits more neatly under supportive services than admin.
There's that assessment of service needs.
Yeah.
And clearly coordinated entry is assessing what folks need and coming up with a plan.
And there's also a housing search, right? So it might fit there too, under supportive services.
All right, are we ready to end? It looks like 73% of people participated and share the results.
So last time we were together, folks asked us to give you a key in the slides so that if you're using these slides as a resource after we end the training today, you know what the answers are. So we've done that. And you can see here that the answer to the first question, no, you cannot charge participants for a lost key. Again, private market landlords might be doing that, and that's they're going to do what they're going to do. There's no disallowance for that in the HUD rules, but as a recipient or a subrecipient of HUD funds, you may not do that. The second question, if staff are providing both case management services and doing HQS inspections, yes, they do need to track their time by budget line item. And finally, if you've got staff who are working on more than one COC grant or two different projects within your agency, yes, they have to do a track by budget line item as well. And it looks like we've got most everyone got these questions correct in our poll.
Correct.
So, all right. Here we go. So now we're going to talk a little bit about the project administration budget line item. So your COC projects can claim up to 10% of the other eligible costs on a project admin budget line item. It used to be in CT Boss, this was capped at 7%. That changed a couple of years ago. Many of you, because you've got older projects, are going to have less than 10% in that admin line. If you don't have 10% in your admin line already, you can shift money from another line, right? You can't just get more money, but you can shift money from another line into the admin line. If you are shifting more than 10% of the line you are shifting from to the admin line, then you're going to need a grant agreement from HUD, a grant agreement amendment from HUD to be able to do that. And we're going to be doing a webinar on grant management, and we'll be going into a lot more detail about how to change budgets in that training, and that's going to be on April 22nd. And there's also the last time we did that training is also up on our website if you want to check that out. So, but you can charge up to 10%. HUD for admin, HUD considers admin to be a direct cost. So that means that you have to be able to demonstrate that you spent those funds on eligible activities. So even though admin is budgeted as a percentage of the sum of your other budget line items, you can't simply bill that percentage as you would an indirect rate, right? You have to have backup documentation for how you spent the money. And you can only spend it on activities that are defined as eligible in the COC program interim rules. So remember, for all of the direct costs in the COC program, you can only expend those funds on things that are explicitly stated in the COC interim rule as being eligible. So if it's not called out in the COC rule, it's not eligible. So for admin, this slide and the next slide goes through what the eligible costs are. So general management, oversight, and coordination, and we'll look more in detail at what falls under that on the next slide. You know, things like if you're renting or purchasing equipment for the project, if there's insurance or utilities or office supplies or rental and maintenance of office space, those are all eligible admin expenses. Training like the training that we're doing today, right, on COC requirements, that's an eligible admin expense. Remember, we talked about last time that other kinds of training are not eligible, right? So the only kind of training costs that are eligible in the COC program are going to be trainings that are specific to COC requirements. So like motivational interviewing training or housing first training, right? Those kinds of more like general professional development things are not going to be eligible. Environmental review, so that's an eligible cost on the budget line item, on the admin budget line item. And then these are the costs that are eligible under that general management, oversight, and coordination, right? So if you are preparing budgets or schedules for your staff, developing compliance systems, right? So a lot of you have quality assurance or quality improvement staff, and a lot of the work that those teams are doing are compliance related. That's going to be billable on your admin line. Anytime that you spend either monitoring your own charts for compliance, or anytime you spend with us when we monitor, or you spend with HUD when they monitor, those things are going to be eligible on admin. If you have either subrecipients or contractors on your grant, the time that you spend, writing and negotiating those contracts and agreements, that's going to be eligible. Your time that you spend on your APR, your annual progress report, or your quarterly progress report, if you are a SNOFO grantee, those things are going to be eligible on admin. If you've had an audit or got monitored and there were some findings on that, the time you spend resolving those things, the time you spend on the CT Boss annual renewal evaluation process, right? That's an eligible admin expense. And then anytime your supervisors or your managers spend supervising the things that we just talked about, that's going to be eligible on the admin line. And then in addition, you're going to be able to bill legal contracts, accounting contracts, and your audit expenses are eligible on this budget line item.
Lauren, somebody asked me a question. Would HQS or Inspire training be allowable?
HQS and Inspire training would be allowable because those are COC requirements. So yes, those are eligible on the budget, on the admin budget line item. Good question.
Thank you. Yeah, good question.
So there, in the last several, I don't know, maybe 3 NOFO competitions at least, HUD did allow these YHDP special activities. They are only going to apply if you are a YHDP project and you asked for these things in your project application, right? So to know whether or not this applies to your grant, you want to look back at your project application to see whether or not you asked for them. And then in some cases, HUD also required these YHDP special activities to have explicit approval from HUD. So you want to really look 2 places in your project application and also on your grant agreement to see whether or not what you have approved in terms of YHDP special activities. But if you asked for it, then you should be able to use admin funds to employ young people in your program, which is very much encouraged, and also to attend non-HUD sponsored or approved conferences as long as those things are relevant to youth homelessness. And again, this is not all grantees, it's only YHDP grantees, and only if when you check your project application and or your grant agreement, it says that you can do these things. All right, next item. So this applies to everybody, not just YHDP grantees. So there is a requirement that if you are the recipient, right, so you get money directly from HUD and you subcontract that money to other agencies as a subrecipient, you've got to share at least 50% of what you get on the project admin budget line item with those subrecipients. Now, HUD does not mandate how the funds are distributed, so you can distribute those funds all to one subrecipient, or you can share them among multiple subrecipients. You just have to make sure that at least 50% of the total is shared. I think in most cases, what subrecipients do is they kind of split it equally among all of their, what recipients do is split it equally among all their subrecipients. So, okay. Next item. So we're going to talk a little bit still about administrative costs. So you can only bill admin based upon actual admin expenses, right? So it's different than indirect. So you've got to have backup documentation for the expenses. So if, for example, you're billing staff to admin, right, you're going to need to follow those rules that we just talked about. Either you're going to need to have a timesheet in some circumstances, or you're going to need to have both timesheets and that personnel activity log, right? That's the backup for admin expenses, time your staff spend on admin expenses. If you're paying, for example, for a training on HQS, as somebody just mentioned, you're going to want to show, for example, a receipt, right, that you made that payment for that eligible training. If you're also claiming an indirect rate, and we're going to talk in a minute about the difference between admin and indirect, you've got to make sure that you are not charging the same cost to both admin and indirect. So you have to classify every cost either as admin or as indirect. You cannot be billing costs the same cost to both categories. And then again, you can only bill things that are explicitly stated in the COC program interim rule as eligible on that admin budget line item. So I think we are going to do another quick poll.
Getting it up. Right.
So our first question here is supervision for case management staff is an eligible expense on which COC budget line item? Supervision for quality assurance staff is an eligible expense on which COC budget line item? And then finally, true or false, administrative costs can be billed as a percentage of the total COC budget and do not require backup documentation. We'll give you a couple minutes to get your answers in here.
We really should have some Jeopardy music for the waiting period. About 55% participated now.
Do 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 do. All right, Howard.
Thank you. All right. 65. I'll give it a couple more seconds, then end it. All right.
All right. So we'll go through our answers here. So for the first one, supervision for case management staff is an eligible expense on which COC budget line item? It is eligible on the supportive services budget line item. Supervision for quality assurance staff is eligible on the project administration budget line item. And finally, administrative costs are not, this is false. Administrative costs do require backup documentation and cannot be billed just as a percentage of your other COC budget line items. So this item is false. All right. Next slide here. So we'll talk a little bit now about indirect costs. And indirect costs and admin are two different things in HUD's world. And I think that's very confusing to a lot of our grantees because it works differently than other kinds of funding that you get. So you can claim both admin and indirect from your on your COC projects, and we encourage you to do that, right? So indirect costs are unlike admin, are basically expenses that you incur kind of for your agency as a whole that are not necessarily specific to your COC project, right? So they're things like, your costs for human resources, your costs for your IT department, your costs for your fiscal department, right? Those agency departments are serving the agency as a whole, and they're very hard to allocate to a specific project as a direct cost. Another example might be you might have vehicles that are shared across all the programs in your agency, right? Those are examples of indirect costs. In order to bill indirect costs, and I think this is where people get tripped up, is you have to claim that on your eSNAPS application. So there's a part of the eSNAPS application where it asks you if you're going to claim indirect costs. If you click that box, a whole bunch of other questions, not a whole bunch, but several other questions are going to pop up. And I think people see those other questions, they don't know how to answer them, and so they just say, no, we're not going to claim indirect, right? It's not that hard to do, and we can help you. So we encourage you to say, yes, you are going to claim indirect, and we will help you figure out how to answer those other questions. So if you are going to claim indirect, there are two different things that are possible, right? So one is that you can claim the 15% de minimis rate. Now, this used to be 10%. So HUD, or the federal government, change that effective October 1st. So as we discussed last time, even though HUD increased the rate effective October 1st, eSNAPS wasn't set up to allow you to claim that increased rate until the 2024 competition. So for most of you, if you are claiming indirect, you are claiming it still at the 10% rate. Now, we submitted a question to HUD to ask whether or not you can increase to 15%, even if in your eSNAPS application, you only asked for the 10%, and we are waiting to hear back. So we will let you know when we get an answer to that question. So de minimis is one option, and then the other possibility is that your agency may have what's called a NICRA, a negotiated indirect cost rate approval, maybe is the A in that, agreement. So, and if you've got a NICRA, then you're going to have a specific rate that your agency negotiated with the federal government. So there's not one NICRA rate that applies to everyone. Every agency has their own NICRA rate. So, and again, super important to understand that indirect and admin are charged differently, right? So admin is direct and you've got to have backup, right? Indirect is charged just based upon that rate. So whether it's the 15% de minimis or maybe your agency has a 20% NICRA, right? It's just charged based on whatever that rate is, and you don't need backup in documentation for the indirect rate. So this slide goes through who is eligible to claim the de minimis rate. So you are only eligible to claim the de minimis rate if your agency doesn't have a NICRA, right? So if you have a NICRA, you have to use that NICRA, and you never had a NICRA. And you can claim the indirect rate indefinitely as long as you don't have a negotiated rate, but you have to do that consistently across all of your federal awards. There's also a cap for the total amount of federal money that an agency gets. If you get over a certain amount, you are not eligible for a de minimis rate. That cap is very, very, very high. I think the only agency that we have in Connecticut that is above that cap is probably the DMIS, the Department of Mental Health and Addiction Services. Howard, do you know what the cap is?
Yeah, it's Lauren, it's $35 million in direct federal funding in a calendar year. But that only applies to government, either a state or local government agencies. Not-for-profit organizations are not not-for-profit organizations in the state that have over $35 million in federal funds, but it is a limitation on government agencies that they cannot claim. Otherwise, a government agency is entitled to claim either the de minimis or a negotiated rate. And those of you who are following the news probably noticed that the feds are trying to clamp down on these negotiated indirect cost rates. They're doing it, as you've probably seen it, in the National Institute of Health. Who knows? Obviously, there can probably be some legal challenges there, but so far, I mean, as you probably have seen, where they've tried to cut down on those negotiated rates to bring them down to the 15% level. So if you're using the de minimis 15% rate, at least thus far, that would appear to be something that they will permit.
Great. Thank you, Howard. All right. So last slide I'm going to do, and then I'm going to turn it over to Howard. So this is, I think, where people really get tripped up in the application, right? So the 15% de minimis rate is not applied necessarily to your total COC budget, right? It's applied to this thing called modified total direct costs. So you have to calculate what modified total direct costs are and include that calculation in your application. So for example, if you've got a COC budget and the total budget is $125,000 and modified total direct costs is just $100,000, you can only apply the 15% de minimis rate to that 100,000, that MTDC amount, right? So the maximum that you can get for your indirect is going to be 15,000. And Howard is going to talk about how one calculates modified total direct costs.
Okay, great. Good morning, everybody. I'll speak directly now. So I think something that got people very confused historically was when we both had the cap at administrative funding at 10% and the de minimis rate was 10%, those two 10% got people very confused and sort of saw them being as being the same thing. Maybe now the de minimis rate has changed to 15%, the cap on administrative is stated at 10%. It may or may not remove some of the confusion. But what we've got here, this is a list of things that basically by regulation cannot be included. You cannot claim that 15% de minimis indirect costs on the items that are listed here. We've got more detail in the following slides, so I'm not going to go into too much detail right here. But equipment, remember, actually, they made the rules that we're talking about, these are OMB requirements. They're called the Uniform Guidance, and it's the citation is 2 CFR Part 200, and these are basically the overall across the federal government rules for doing business with the federal government. When they updated the rules under 2 CFR 200, as Lauren said, that became effective at the end of last fiscal year, at the start of fiscal year 2025 on October 1st, they changed a couple of, first they, as we noted, they changed the de minimis rate from 10% to 15%. They also, on an item like equipment, they changed it. It used to be if you were spending $5,000 more on a single item, that was going to be classified as equipment. Once something gets classified as equipment, there really are disposition and other things that you need to do, inventory. There are rules that you need to follow about that. They changed the bottom amount on equipment is now $10,000. So anything that you're purchasing for your organization that is $10,000 or less, you can call that supplies. You don't have to inventory it. You don't have to call that equipment. Once it goes above that $10,000 mark, you have to treat it very differently. You cannot include any equipment cost. The capital expenditures, Lauren briefly mentioned that under the COC program, that would be if you're using COC funds for acquisition, for rehabilitation or new construction, absolutely none of those costs could be applied, could count for against the indirect rate. As Lauren said, we rarely use it, but there was that COC builds notification of funding opportunity that was issued that was basically for capital expenses. Whether the government goes through and awards those is anybody's guess at this point in time, but that was certainly an example of where capital costs could have been used for COC expenses. Why don't we go down to the other thing I'll say before I go to more detail, because our following slides give us some more detail. But the last bullet on this slide is another change. It used to be if you had a subrecipient, you could only claim the de minimis 10% or 10% then, now 15% on the first $25,000 of any subcontract that you had with another entity. As part of the revisions that they made effective on October 1st, that limit, as shown here, changed from 25,000 to 50,000. So if you have a subrecipient, you're claiming the 15% rate, you can get 15% of $50,000 on your indirect costs. And I'm not going to embarrass myself, but I think that's 7,500. Next slide, please. So, okay, so here, I didn't want to go into it because we've got more detail of some common continuum of care expenses that you cannot, and see, these are major expenses. So, for example, if your budget includes either rental assistance or leasing, and many of your budgets do, overwhelmingly, the costs on those budget lines, you're not allowed to claim indirect costs on. So as you can see, rental assistance, any payments that are paid directly to the landlord, forget about it. You can't claim indirect on those. If you know, as long as you're not the owner of the property and you're legitimately paying for a security deposit, can't claim indirect on that. Same thing, as you know, you can claim up to 1 month's worth of rental of the unit rent for damages after the tenant has moved out. You cannot claim the indirect on that. Same thing on, as you can see, under leasing, except there's different requirements on property damages under the leasing requirement. Interesting or very confusingly, some of costs on your supportive services budget are going to be eligible to be claimed, to have indirect claimed on them. Other things are not going to be. So things like childcare, moving costs, all this education, employment assistance, if you got a food on your budget line, if you do any of those, either behavioral health or physical health services, outpatient health care, substance use treatment, mental health rehabilitation, all of those are eligible expenses under the COC program, but you can't claim indirect on those. And similarly, you can't claim indirect on utility costs. So they're really, if you're claiming the 10% or the 15%, sorry, de minimis, you really need to look very carefully at your individual budget lines when you're calculating your modified total direct costs, and only include those items that you are allowed to claim indirect costs on. Next slide, please. Okay, another thing that sometimes tricks people up, but basically HUD says that you can actually claim your indirect rate on those administrative expenses that are eligible to be claimed under admin costs. That 10% limitation on admin costs does not apply towards costs that are billed under indirect. As Lauren had stated before, if it is a cost that you're paying for under your indirect cost pool, you do not have to provide documentation to HUD or other government agencies as to how those things are spent, with the very important caveat that we've mentioned several times. You just need to make sure in your accounting that you've fully separated out those costs that you're charging to the indirect costs, and none of them drift back into your direct costs. One thing I think we haven't emphasized enough: if you're going to claim and seek to claim indirect costs on your grants, you really should do that in close consultation with your outside accounting firm, your CPAs. It is a very complex thing. It really has implications for lots of things in your organization, and you do not want to indicate or start to claim indirect costs without having a thorough discussion with your accountant on it. As Lauren has said, once you claim it on a federal grant, you must treat all federal grants similarly. So you're going to be, you would be required to claim it on those grants as well. So again, can be very useful, in terms of making sure that your organizations are overall financially viable. But like any federal funding, it comes with lots of requirements, and you really want to make sure that you've got that good outside consultation on that to make sure you're protected as well. Next slide, please. Oh, okay. Yes. So again, um, if you want to claim the indirect costs, and after you have had a discussion with your accountant that this is what you're going to do, and when we go in and monitor, there have been on more than one occasion where we see that the organization, as part of their application to HUD, says that they intend to claim the indirect costs, and then as part of their audit, it will be said by their CPA that the organization is not claiming the 10% de minimis. So these are or the de minimis rate. So this is where you really want to make sure that you and your accounting firm are on board and you're reporting the same information to the federal government. Lord knows, historically, every year when one applies to HUD, there is an opportunity in the eSNAPS application on one of the budget forms. There is very clearly the question: do you intend to claim indirect costs using the de minimis or otherwise on this grant? If so, they're going to ask you, what it is, how much, what you consider to be the indirect cost base, the modified total direct cost. They'll ask you for what that is, which will then give HUD an idea as to how much of the grant you'll be using as indirect and how much will go as direct rates for services. We're going to have another slide next talking about this next bullet point. This actually can be very, very useful to you. You know that there is a matching funding requirement for all COC grants. Basically, it is 25% of all funds other than those funds expended under the leasing budget line. If you notify HUD in advance and tell them it is your intention, you may, for example, many of our COC grants are old and have been the same basically budget line amount, except for some changes that we're now seeing in the supportive services budget line and the annual changes for increases in the fair market rent. Basically, those budgets have remained the same. There's no way that you can ever, if you've got a 10-year-old grant, you're not going to be able to increase the size of the grant to be able to get all the indirect costs that you're entitled to, because you're basically spending all of your grant funds already. If you say that you want the indirect costs and there are not sufficient funds in your budget for you actually be able to receive the indirect costs that you're eligible for, those are funds that the federal government owes you. And therefore, under those circumstances, you can actually apply those indirect costs that you're not able to directly receive towards your matching funding requirement. And in some instances, that can be extremely useful for organizations, helping them to meet that match with in essence, on paper, and not having to come up with those additional funds. So that can be useful. As noted on the slide here, if you happen to have a number of organizations, especially the larger ones, have gone through the process, they've got a negotiated indirect cost rate agreement, you need to attach that to your application. Once you have that, every negotiated rate is unique to the organization that's negotiated it. So only by having that rate can HUD or anybody else assess what it is that you can legitimately claim on your indirect cost line. It'll both be, if you have a negotiated rate, it'll both specify a rate, but it'll also talk about the direct cost base, basically your equivalent of your modified total direct costs. And so say your rate is going to be, say, 18%, something like that. Generally speaking, you're not going to, the base that you're going to apply it towards is either going to be salaries and fringe. They're going to be something less than the total budget. So that's why you really need that agreement to be attached, so folks know what indirect costs you're eligible to claim. Next slide, please. And here, so this is what I just told you, and this is the citation that says that it may be included only with the approval of the prior that we want to give them the opportunity to give you prior approval, and you give them the opportunity to give you prior approval by noting in your application that you intend to claim that rate. You also can indicate in the application that you're going to apply some of that to your matching funding requirement, and therefore when you go through the technical submission and HUD executes the contract, they will be informed that it is your intent to use your indirect cost to help you meet your matching funds requirement. So can be very useful in the right circumstances. So pay attention to that. Also, if we ever get a time when we get to apply for new project funding under the COC, then you can do a full budget, and your budget would be capable of including both your direct costs and your allowable indirect costs. But on existing grants, you're not going to be able to increase the size of the grant. So what you might do is, if you're seeking the indirect, is be able to apply them towards your matching funding requirement. Next slide. Okay, so this is basically a way that you can see what is allowable in the indirect cost rate and what is not allowable. And as you can see, so we're just taking some basic budget lines here. Case management, that is an cost that is allowable under the modified total direct costs. So basically all of our budget that is being applied towards case management, we can charge our indirect rate to. As I indicated before, the overwhelmingly rental assistance costs are not allowable. The only costs you could charge indirect rate under rental assistance are the very limited staff time that you could spend doing housing quality inspections, late space paint, visual inspection, I guess, or the time your staff is going to spend calculating what the tenant rent contribution be, verifying income, that kind of stuff. That staff time you can charge the indirect rate on, but you can't charge any of the actual rent, security deposits, so that we've basically zeroed out all of that rental assistance and said we're not going to charge any indirect on that. We gave an example where there was a sub grant of $75,000. As we said, under the changed limits, you can claim your 15% de minimis on the first 50,000. That's that $7,500 mark here. And for the most part, you can claim your indirect on the staff that is performing the project administrative functions. So we're showing that there. So basically what we're showing here is on a total grant of $225,000, the allowable indirect cost under the modified total direct costs would be $17,250, which of course is substantially less than 15% of the total grant. And that's why we're doing this calculation here, to make sure, because people do sometimes, miss that modified total direct cost calculation and think it is against a larger pool. Next slide. Oh, so we've got a poll here. So jump in, folks. So we've got the first question is, many trusts can be charged as direct or indirect. And these are true, false, I believe. Yep. Correct or incorrect, which is another way of saying true or false. So is this correct? Can costs be charged as direct or indirect, and the recipient determines what, if any, cost will be billed as indirect? Correct or incorrect? Claiming the 15% de minimis can claim 15% of their total COC budget as indirect costs, provided that a recipient has established controls to ensure that no cost is billed both as direct and indirect. Documentation of expenses is not required for costs billed to indirect. And finally, to claim indirect costs on a HUD grant, a recipient must first inform HUD in the project application. These are all true, false, correct, or incorrect, however you wish to think of it.
Or not sure. We gave people that option.
Oh, sure, not sure. Okay.
Mhm.
Take a couple of more moments.
A little over 25% completed so far. Good job.
Okay. I think we're done.
All right. Almost
So,
50%.
okay. You want to go?
Go ahead.
Oh, here we go. The answers have now been automatically entered in the thing. So yes, again, the federal government, the federal government says every nonprofit organization is unique. They all do their finances uniquely. So every organization determines for itself which cost they're going to bill to indirect and which they're going to bill directly. As we have said, I think pretty clearly, don't get confused by that 15%. It's not 15% of your total budget. It's 15% of modified total direct costs, which are going to be different than your total budget. Again, nice thing about indirect costs, you are entitled. It's your money. You do not have to document how it is that you've expended it. You basically earned those dollars from the federal government, and you cannot bill for indirect costs to the federal government if you have not indicated, or on HUD, if you do not indicate that you intend to do so as part of your application. Okay, let's keep marching. Okay. Again, if this applies to you, you probably know it. It's called the single audit. It used to be called the A133 audit. You may have heard it called that under the old guidances that were in effect. But basically, if your organization receives more than, and they changed the limit as of October 1st as well, that it went up to this $1 million level. But if you get $1 million or more of federal funds, that's, from multiple sources, doesn't matter. It's funds from the federal government. If it's more than $1 million from the federal government, you are required to provide this single audit to the federal government. Very important. I mean, you get 9 months from the end of your fiscal year, to get it completed, but you must get that completed within that period of time, and you must share it with HUD. Failure to do that will probably result in your grant being suspended until such time as you provide them with the single audit. You have to, again, generally speaking, it's a fairly complex undertaking. So you want to make sure you're following your contracting procedures in your selection of your auditor to do that single audit. And if there are any corrective actions or any guidance, any questions, concerns that are in that audit, it is incumbent upon you that you address those findings and concerns in order to continue doing business with the federal government. We monitor you all the time. I don't think that I've not seen this be an issue that folks do not understand this rule. We see the single audits from your organizations when that's the required audit that is required. And so you folks are, for the most part, following this rule. And it's a requirement. Next slide. Okay, so again, you probably know this, but you are expected. It's odd in doing business with the federal government. You are expected to fully expend the funds that have been allocated to you for the purposes to which they've been allocated. One of the things, assuming we have continual competitions, we do assess the extent to which programs are fully expending their funds, and failure to fully expend the funds results in a decrease in your renewal evaluation score. So that is important. Of course, failure to spend it means it's not assisting people experiencing homelessness in the state of Connecticut, but it's going back to the federal treasury to do other purposes, which is not which is great, but it's not really helping the cause that we're seeking to create here. Remember, one of the ways that one can assure that your grant is fully expended is by tracking your budget to actual expenditures. If you find that there's a budget line that is significantly under expending and is not catching up, you really want to do those minor budget modifications, 10% or less of a budget line, move those funds over to a category where you can fully expend them. That's the way in which you can work with your budget to make sure that you're meeting that requirement. You really are expected to do that. What else can we say? Pay attention to your budget. Make sure that your board is receiving budget to actual reports as part of their monthly board agenda. Next slide. Again, one thing about the eLOCCS, I think everybody knows about it. I mean, obviously you have to be able to access that system. We've said this before, but it's important to keep saying it. We are in highly unusual times. Although the guidances and the federal requirement is that you must draw down funds no less frequently than quarterly, right at the moment, we are strongly encouraging folks to draw down those funds on a monthly basis. As soon as you've completed your month, we'd really recommend that you draw down those funds as soon as possible thereafter. We know earlier in this year there was a little issue about accessing the eLOCCS system. Hopefully that will not happen again, but we're not guaranteed that that will not happen again. So if you are entitled, which you are at the end of the month, to draw down funds on your HUD grant, every recommendation would be that you go in and draw down those funds, because God forbid something else could happen. Remember, if you do not access the eLOCCS system every 90 days, you will be locked out of the system, and you're going to have to go through a little bit of a procedure with HUD to get re-access to that system. Again, we strongly urge you to not do anything that would jeopardize your access to the eLOCCS system. It does require active intervention from HUD to be able to get you back into that system. Given the staffing, given the other issues, given the other concerns that we have, it might take much longer than you expect for HUD to be able to give you that re-access. And by the way, if you get locked out of eLOCCS and it's 90 days after the end of your contract, you're never going to be able to access those funds. So be sure that you can access them. Remember, you do have up to 90 days after the end of your contract term to draw down funds only on expenses that you incurred during the contract year, but you do have that grace period of those 90 days at the end of the contract period to draw down any funds that you had not drawn down. I think that's all I've got to say about it, but this is, really important. And same thing, by the way, on the eSNAP system and stuff like that. If you get locked at all these HUD data systems, we're just nervous. We want you to make sure that you keep your access to those systems, check them to make sure you can keep getting in there. Because again, we just can't be confident that if something were to go wrong, that we'll be able to get access back in. Next slide.
Can I?
Oh,
I just
yes,
want to
please.
add. I've heard a couple of large staff turnovers recently. So if that staff has access to locks or eSNAPs, as soon as possible, get another staff access or get working on that, so you don't prevent yourselves from being able to access them in the future.
Great. Thank you, Shannon. This slide here, oh, by the way, I mean, obviously, COC, staff members of organizations working on COC grants, of course, are compensated for their time working on that COC grant. What we're talking about is working on behalf of the continuum of care. For the most part, the members of the continuum of care, they're basically doing that. Unless you're a person with lived experience of homelessness, the time you spend participating in the COC is not compensated by the COC. And of course, as in all things, no surprise, you're not allowed to solicit or accept gifts. I mean, if you're out there to do a housing quality inspection and a landlord wants to give you a gift card so you can go to Starbucks and do whatever, do not take, you don't take gifts or anything like that. That clearly would be being offered to you in hopes that you would do something that would be favorable towards the person giving you the gift. So obviously, the only compensation that a person working on any COC activity should be their salary expense when they're working on eligible COC budget expenses. Next slide. Okay. One of the things your auditor, when you do your annual audit, is going to look at is to make sure that you have effective internal controls. Internal controls are the way in which you make certain that funds that are allocated to your organization are expended for the purposes for which they are intended. We always say, a lock is not going to stop a dedicated burglar from getting into your premises. It is going to stop honest people from making a mistake and doing something. Internal controls probably are not going to prevent a dedicated fraudster from committing fraud, but they are going to stop because sadly, we see it time and time again that there can be sometimes people who work in fiscal offices in a nonprofit organization can have personal crises. Somebody gets sick and they can have an immediate fiscal crisis and they need money. As long as you've got a strong set of internal controls, people will understand that even they have that need, the budget, the funds of that nonprofit organization are not a place to turn. If there's one person who does the entire fiscal operations, they've got no one else is looking over their shoulders as to what's going on, and they have a crisis, there may be a temptation in that moment of crisis to reach into funds that are not theirs. And then, God forbid, if that happens, people also find if they get away with something, they sometimes do it again. And that's what happens. I mean, so even in good organizations, sometimes good people um, do something that is wrong because they're in a crisis. And the way to help them and your organization is you have good procedures in place so that people are not exposed to the possibility of being able to do it. So basically, you've got an organizational structure, you've got a division of responsibilities with your organization, and we don't have overlapping responsibilities. You've got policies and procedures so that when you're hiring somebody for your fiscal staff, you're going to hire people who've got the appropriate experience, credentials in order to perform that function. You're not hiring somebody who lacks that experience and therefore could make those mistakes. The separation of duties is the key thing. I mean, basically, you want to make sure that there's more than one set of eyeballs looking at everything that goes on fiscally. Most important is things like reconciling the checkbook. If what can sometimes happen is a check is issued and then and it gets signed and someone makes a modification to that check, and what had been a check for $1,000 becomes a check for $10,000. What would happen is when that bank reconciliation is being done, we'll see, whoa, there is a discrepancy between what we thought the record was and what this check was for. What is going on here? If somebody else is doing that reconciliation, they're going to find it. If the same person who wrote that check is doing the reconciliation, well, they're going to have every incentive to not find that something was wrong there. So that's why you want to separate those out as much as possible. You want to, of course, make sure that the only people who have access to your financial books and records are those who are authorized to do so, and all those materials are kept under a lock and key so that unauthorized people cannot get access to your checks, your check stock, or anything like that. And then finally, you don't want months to go by without doing a bank reconciliation of checks and things like that, because that could have allowed fraud to occur from that. So I think it is clearly there are times in small nonprofit organizations where evil people get involved and try and steal from that organization, but I think that is the minority of the cases. I think if there are problems, and they do happen in the nonprofit world, it's otherwise good people where we've got a bad system, and good people are given an opportunity to do things that are not good. And our goal through all of these internal controls is to basically set those, locks and systems so that people are not tempted to stray outside of the borders and ruin their lives and really hurt your organization as well. Next slide. Okay, so in the event that things go south in your work with HUD, you're working with the federal government, so there are any number of things that they can do as recourse. One of the things, of course, they can and will do is suspend further payments to your organization while they work things out. HUD has the right to basically substitute a grantee. I mean, they can determine that the activity is critical, but they don't trust your organization to carry it out anymore, and they can replace your organization with another organization to carry out that mission. We see this often. HUD will either say, will not accept the matching funds that we're saying, and basically claim you're going to have to come up with additional matching funds to do it. If things go really seriously wrong, and HUD has found that you have not either made the match or you've expended funds for ineligible purposes. They've got a simple remedy for that. They basically ask you to return the funds to the federal government. They will ask for a wire transfer. They'll tell you how to do that wire transfer. And I can assure you there is no government contracting nonprofit organization that likes having to do a wire transfer of funds back to the federal government. No, that never wants that to happen. HUD, of course, as we're seeing, the government has the right to terminate all kinds of contracts for the convenience of the government, and they can do it either because of foul play or they can do it for the convenience of the government. They can terminate a contract. We're seeing that in real time, in real life. And finally, as we see this sometimes, they can impose conditions. They can debar organizations from contracting with the federal government if they found that you've engaged in fraud or otherwise illegitimate purposes. So basically, and finally, if there really is, if it's not simple errors and things like that, but there really was an attempt to defraud the federal government and to basically pilfer federal funds, I think we still have an FBI. There is the possibility for federal, law enforcement sanctions as well to kick in. Next slide. Okay, here is yet another poll for us. So here are and these are true or false. Again, okay, so it's not correct or incorrect. So these are true or false. We can reduce underspending by paying in advance for services from outside contractors. We have 120 days from the grant end date to draw down funds from eLOCCS. If I get locked out of eLOCCS, I will be able to draw down any unspent funds whenever HUD restores my access. Whoever asked for this, I hope you're happy.
I'm happy. A few more seconds, 40%. All right, I'm going to go ahead and end the poll.
Okay, did you end it? Well,
Yeah.
well, good. On first one, I apologize. I don't know that we spoke clearly enough on this, but obviously, no, you cannot pay in advance for services. Basically, the government doesn't do that. The federal government reimburses for services that have already been provided. Again, you don't have 120 days, it's 90 days. That's very important. And make sure you stay within those 90 days. As I indicated before, as long as you're within that contract year, but again, if something goes wrong and it's more than 90 days after the end of the contract term and you are locked out of the eLOCCS system, and even though you've got legitimate expenses, you're not going to be able to draw them down. Your access to the funds will have terminated after 90 days. Okay. That's great. All right. So what we have now is basically a set of of links to you for additional resources. Obviously, the COC interim rule that tells you how you can expend continuum of care funds. So you can only spend things that are specifically identified as eligible expenses under the COC program interim rule. There's uniform in its latest requirements. That's the thing is also called the uniform guidance. That is 2 CFR Part 200. That is an OMB rule, but pay attention to it, and you're going to be seeing how powerful OMB is over this next period of time. It's a very, very, very powerful agency. In addition to the regulations, HUD issues notices. They've been cleared by legal, so notices are as legally binding as a regulation is. There are also continuum of care frequently asked questions. Those are a little less legally binding than a notice or a regulation, but they provide great clarity. And the Youth Homelessness Demonstration Program, God bless it, but it has very unique sets of requirements, lots of special exceptions, pretty complex. And so there are special resources for people who have assistance under the YHDP program. And that's on this link here. Is there anything else? Okay, and then we do, look at that puppy. He looks surprised, actually. But there is, we do and continue, and we will continue be doing monitoring, and to make sure that you understand what it was going to do. If we ever come out and monitor, we provide every question that we're going to ask, everything we're going to look at as part of our monitoring guide. And so please, especially here that we're going to monitor you, take a look at that guide to make sure you know what we're going to be looking for. Okay, and I think that is, we have our last little question here, right? As to what adjustments you're going to make to align with our requirements. And this is, we are now open for questions. Of course, we don't have that much, we have very little time remaining. As Lauren suggested, we will not all split at exactly 2 minutes from now in case there are questions that you haven't gotten a chance to ask. And, oh, Kathy, I think you got a question.
I do, thanks.
Super.
Let's see, you had said earlier that we need to share at least 50% of our admin with our subrecipients. If our subrecipients have a small amount of their contract, so that the 50% would be more than 10% of their contract, is it limited to the 10% and we can still keep the excess? Am I making any sense to
Yeah.
you?
Yeah, you definitely are. And Lauren, do you agree with me? I mean, my sense is, yeah, no, I mean, basically they should not, they can't charge more than that.
That would be logical. I just don't know that there's any guidance from HUD that says that. Like the interim rule says that you have to share 50% of the admin with your subrecipients. I think, Kathy, we should probably submit a question to HUD, and I'll do that after the webinar just to be sure. Logically, if they're only getting 10% of the ward, then it would be 50% of their 10%, but I don't know that that's necessarily the case.
Okay, that would be helpful. Thank you.
Sure.
Kathy, Zell, do you have a different question or?
Yes, I do.
Super.
I understand all this where you're the direct grantee from HUD. Are there any important differences if you're a subrecipient, let's say to DOH or to DEMIS? Like I've never been asked to document my match, and I'm just curious, and obviously we're doing all this reporting in core. I don't know why, I'm just thinking about that.
So if you're a subrecipient to DEMIS, Kathy, then you do not need to document your match because DEMIS provides the match and documents the match. If you are a subrecipient to DOH, right, you are responsible for both providing the match and documenting the match. And I think it's important to remember that just because no one has ever asked you before to show something does not necessarily mean that if HUD were to come in to monitor that they wouldn't ask you to show it in the future.
So should I just produce some kind of report at the end of the year and file it away? I don't have it in my accounting system. I don't have a way. I'll have to think about it, but maybe I'll just do a report at the end of the year to document the match.
I think for cash match, it's a lot easier, right? So for cash match, you basically just have to show that the money came onto your books and was expended on eligible activities. If it's in kind, then it's more complicated. But I don't think you need to necessarily do a separate thing, although you certainly could. I think we're at the time, so I just want to, maybe Shannon will end the recording and invite people to hop off or stay on if